Hey everybody, it's Brooks with AgriSompo, and welcome to another edition of Straight to the Point. This year you might see the name Tilley and AgriSompo together, and that's because the companies have teamed up to bring a level of expertise and some cutting-edge software to the crop insurance field. Together, these two things are going to help make some decisions that are going to be benefit to the American farmer and the crop insurance agent in 2026. Well, speaking of subject matter expertise and cutting-edge software, I'd like to introduce our guest this month, James Brown, president of Tilley. James, welcome to Straight to the Point.
Thank you, Brooks.
James, we got Tilley's got so many different tools that can be utilized not only for an agency or the farm, but today I think we're going to concentrate on these Title I disaster programs. ARC and PLC is how they're referred to a lot. Now, normally we would have just come off making those decisions at the FSA office. Things are a little different this year. So over the next 10 minutes, I'd kind of like to do a few different things. Describe the programs, describe the decision-making process behind those, and how we can make life easier a little bit for crop insurance agents and farmers across the country. Starting off, let's do a quick review of those Title I disaster programs. We're going to concentrate on ARC County and PLC this year. You've been around this business for a while. ARC and PLC, give us a 30,000-foot view of what those programs are.
Yeah, at the simplest level, these are shallow loss programs through the FSA. Ultimately, the bottom line is, ARC agricultural risk coverage. It pays, in this case, ARC County, when their actual revenue falls below its recent historical average. And then, so that's people that are really concerned about revenue loss. And if you're not worried about the yield component, i.e., you're just worried about price, then there's the PLC, or the price loss coverage program, which pays when the national market price drops below a fixed reference price set by Congress.
Yeah, a lot of changes in one big beautiful bill to both of those programs this year. Maybe we should take a few minutes and talk about some of those changes. One of the changes, I mentioned that we are usually making those decisions right now, and we're not this year. Recently, that March 15th deadline has been pushed back until well after planting season. We're not exactly for sure what that date is. The good thing there, it gives us some time to really calculate and study which program that we might want to do. But in regards to one big beautiful bill, there were bigger changes than that. A few of those changes, James, came in the ARC and SCO being able to put together for the first time. Give us an idea of what that means for agents and farmers across the country.
Yeah, absolutely. So I think the bottom line is what decoupling of ARC County and SEO means, for this is it means that ultimately we have the ability to essentially totally decouple the ARC and PLC decisions from crop insurance. So I think, yes, there is some overlap, but the bottom line is they're now somewhat independent. So in normal times, step one is, we would optimize for those FSA programs, ARC or PLC, whichever we think has the higher projected payout. And then we would go to optimize our crop insurance accordingly. What that means for farmers and agents this year is this. So one unique thing about one big beautiful bill is for 2025 crop year only, you're going to get the higher of ARC or PLC. So it doesn't matter. And what that means is that for agents, as you help your growers over the next 30 to 45 days in renewal season, farmers are now asking, what is my projected 2025 ARC or PLC payment, which isn't going to hit until October 26th. And the reason is their bankers are asking them for projected cash flows. So that's one thing is, agents, you need to be prepared at renewal to give your farmers a projected 2025 ARC or PLC payment, even though it's going to change. And then I think step two is, accounting for the ARC or PLC for 2026, which obviously isn't going to pay until October of 27. The important thing there is, we have every conviction the program is still coming. It just won't be sign up until probably in the summer. And so you still need to think about that of how does that how does that relate in terms of your total risk management plan, i.e., where do you potentially have overlapping coverage, etc.
James, I really love that definition that you gave of how ARC and SCO, and I didn't do a very good job explaining. SCO is the supplemental coverage option. It's found in the crop insurance title of the Farm Bill. A decoupling might be the best definition I've seen. We're not going to worry about crop insurance and these Title I disaster programs and how they work together because it doesn't matter. I'm glad you also pointed out that 2025 designations, we kind of get the best of both worlds. So if depending on what you chose last year, it doesn't matter. If you went with ARC or PLC for 1 year in time and you said it, you're going to get the better of the two. And it's important to note the timing of those payments may not be perfect in there because we won't get anything until the fall of 26 for our 25 decisions. So there's a little bit of a delay in there. So I think you did a great job of covering that. James, one commodity that's probably been affected the most by the changes in One Big Beautiful Bill has been cotton. And so there's going to be some new decisions for cotton farmers, especially on base acres. There's going to be some increase of cotton base acres in a lot of southeastern and southern states. Tell us about the considerations that a cotton producer needs to make whenever it comes to ARC PLC, because those may be foreign programs to them this year, especially ARC.
100%. One Big Beautiful Bill was a game changer for the American cotton producer. And the bottom line is with cotton, there's a couple things. Is one, the reference price for seed cotton, increased, i.e. on PLC. And then now the big thing is with cotton is we decoupled, you know, essentially SEO from ARC County. So now essentially you can take them together. And so I think really, what we are going to be seeing and what cotton producers need to think about is, do you drop stacks and then being able to do, the area-based plans at 80% subsidy, ECO, SEO, and then either ARC or PLC. So that's a comparison that every single cotton farmer has to do this season.
Yeah, just another reason to take advantage of that software that's out there. In regards to how these things trigger, one of the things that trips up a lot of people is marketing year average. And that marketing year average, I think you mentioned, it starts on September 1, goes through August 31st. Tell us a little bit about how that works. And I believe Tilley has even got an estimator out there to kind of give us an idea of where we think we might be.
Yeah, absolutely. So, the market year average is essentially an average of what would the bushels off of that crop for the given year be sold at. And so ultimately, how that works is every single month that we get an updated marketing year average file until the end of that period. Ultimately there's two things. So for us, what we do, like 2025 crop year projections, we're pulling in that updated file every single month and providing the most accurate projections with the marketing year average for those programs. The second thing, though, is for 2026 crop year, we have to come up with a marketing year average. And so we're actually on our end in Tilley, we're projecting marketing year average, and we're using that. Also, the bottom line is just that you're accounting for that projected marketing year average when you're thinking about the 26 crop year.
So, James, really to cut to the chase this year, AgriSompo, Tilley, we're in the field right now. We're looking at the software, sharing it with agencies. And it goes well beyond Title I disaster program designations. But as we make these choices, and maybe it's going to be late summer before we have to choose these, and these are on our base acres. It's important to remember, not our planted acres, but our base acres. What are some things that you look at? What are the variables for each farm that you look at when making these decisions? How can we make this more than a gut feel, so to speak, or a guess, and put some science behind it and make sure that the customer is in the best fit for them?
Yeah, so I think that applying science is ultimately these are shallow loss programs. We are holistically managing risk, and so applying science to it. I think that, well, first of all, we need to make sure we have our base acres correct, because so you can actually go out and get your CCC 866 forms as well as your FSA 156 EZ. Put those together, and you're going to have all the information you need to have accurate base acres. And then also, obviously, you have a previous podcast talking about base acres, but going into 2026, there's going to be additional base acres come available in the next few months. So definitely need to be looking at base acres again. The second thing is when it comes to our ARC PLC, even some of the university calculators, while they're better than nothing, don't accurately account for ownership percentages, HIP percentages in ARC and PLC. And so I think that's where you really need to make sure your numbers are right. So you can use Tilley, you can use a university calculator, you can use your own spreadsheet, but you need to be doing the actual numbers. And one of the reasons is because in the last month or so, we've gotten a lot of requests from growers via their banks, where banks aren't just satisfied with, oh, we're going to get a $20-$25 payment, or whatever, $30 to $50 payment from ARC or PLC. They want to see validation because regulators are cracking down on egg banks, and they need actual proof. So you need to be comfortable that you can provide the validation if asked for it.
Well, James, as we wrap up today, give us the next steps. If you've watched this, you want some help with ARC PLC, if you're a farmer, if more importantly, maybe if you're an agent out there, a lot of farmers come to you wanting to help make those decisions on ARC PLC. What are the next steps to get hooked up with this kind of software?
Yeah, 100%. So, if you have an interest in leveraging Tilley, bottom line, you can either Google Farm Tilley and find our website. You can follow our social media, or you can reach out to your AgriSompo rep, and they'll help get you connected. Really high level though, in terms of preparing, whether you use Tilley, you use a spreadsheet, or you use a napkin. I think the bottom line with any of these ARC PLC programs is you need to get comfortable, and that's not waiting until May. That's now. You need to start gathering the information, and then step two is you need to get a system in place by which you can accurately project 25 as well as 2026 crop year payments.
Well, James, appreciate the time today, and hopefully we've planted a seed out there in the country to make things easier. Ultimately, our goal is just to make life easier on the agent side and the farmer side, make these decisions a little bit more simpler than maybe what they've become. Lots of enhancements in one big beautiful bill to make these Title I programs even more effective than they've ever been throughout history. Again, appreciate your time today, James.
Absolutely. Thank you, Brooks.
In summary, our goal is just to make life easier for the agent. We know you get involved in a lot of these decisions, and by having that expertise of knowing that you're making the right decision and helping that farmer make these right decisions should make everybody sleep better at night. The idea of bringing Tilley on as a team member here really is one just designed to help you take the guesswork out of the decisions and have an objective decision-making tool. As mentioned earlier, I think a cotton producer is the perfect situation to illustrate and exemplify in this. For a lot of people that produce cotton, we've not had these decisions to make in the past when it comes to ARC because of alternate programs. One big beautiful bill has changed that. What a great tool to be able to set down and introduce the farmer into making making these decisions and knowing that you're taking all the considerations in mind. At AgriSompo, we realize that being an agent isn't just about knowing policy. You get involved in marketing, you get involved with Title I decision making, just like this. It encompasses all of risk management and really all of agriculture. If you've been intrigued or have follow-up questions about the tools and services that Tilley is offering, reach out to your AgriSompo business development rep. We would love to talk to you to take the next steps. Again, our goal is to make your business stronger in 2026.